Lana Veselova. I'm International Partnership Manager of Cbonds Group. For those of you who join us for the first time, we're a data vendor. We're analyzing fixed income market information, and from time to time we arrange such online seminars. In this reality, we need to shift to online format, although it is very convenient, as right now I see in the list of participants many people joining us from different countries. So you can save your money on the ticket. So today we'll have the discussion on analyzing the high yield investment opportunities in terms of emerging market, as right now the yields are rather low. Today I will be assisted by a great professional, nice friend, and one of our clients from Montevideo, Uruguay, Ezequiel Aleman from Fedus Wealth Management. Ezequiel, thank you very much. Nice to seeing you. How are you doing?
Doing very well. Good morning, Lana. At least good morning to me. I guess good afternoon to you and probably half the audience as well.
True. So today we decided to make the focus on the emerging markets investment opportunities. Maybe let's check those bonds which you were able to find via our bond screener, and tell me a bit more about these companies, as I should say they are rather new for me. And probably for many other people.
No. I mentioned three. I mentioned three options. One of them might be a little bit off the radar, but the other two, come on, cut me some slack here. The other two were perfectly well-known brands.
Well, let's do it in alphabetical order. So okay. Send me these bonds. So I just opened the pages. So let's start with Arcos.
Okay, Arcos Dorados, for those not fluent in Spanish, it means golden arches. We all know what the golden arches are. So Arcos Dorados is the company that has exclusive franchise rights over all of Latin America of McDonald's. Last I checked, I told you it was a known company. I told you it was not a very rare find. So Arcos Dorados is it used to be back in pre-pandemic. It used to be our biggest go-to company. A lot of our clients have held this securities for quite a few months and years. Because it has a very interesting coupon. Now the price is, now it's trading at pretty high prices in line with current market, but it used to be, Arcos Dorados used to be it is the biggest franchisee of McDonald's. They basically represent roughly 7% of all McDonald's stores worldwide. And even though the fast food industry has suffered quite a bit during 2020, the numbers we're seeing from the company is that the revenue flow has gone pretty steady, and we're very confident in the capabilities that Arcos has of servicing their debt. It's a company that's not going to have any problem renewing debt once up to maturity. It has a certain level of diversification. So it is an strictly LATAM company, strictly LATAM. They do not have any business outside of LATAM, but they are all over LATAM. So it's not that they're bound to Argentina or to Venezuela, which are a little bit trickier countries, and they're not only in Chile, which is the nice little the country that does their homework right, but provides lower yields. So they have a throughout LATAM diversification that makes it attractive. It has interesting liquidity. It has enough institutional investors. Their headquarters is on my building, one floor up. So that's where I bring the home bias. As I mentioned, I'm in a free trade zone. It's a tax-free area. So the fact that we are in a tax-free area makes it a very interesting hub for some companies that do business in Latin America. So Mercado Libre, different global, different Latime companies have moved their headquarters to this area because it's very convenient. So the issuer, it's a very interesting issuer. The business is good. They've managed to cope with the pandemic quite well. They've reestablished, they've reinvented their business model quite well.
Their equities are going pretty not bad, I should say.
It's not bad. True, equities have gotten a hit in Latin, especially compared to some other global equities. But no, it's a healthy company. It's a good company. The founder and he stepped down from day-to-day management. But the founder is a very respected businessman that has been in the region for decades. So it's a company that we feel comfortable. It's a company that clients feel comfortable holding because clients bring their children to McDonald's, they bring their grandchildren to McDonald's. They know the business. They know, and I'm sorry if there are any McDonald's fans watching, but they know that you are way overpaying something that they call a hamburger, but might not really be one. By the way, I'm a big meat eater, and I'm a big investor in the company. Just I don't buy their products for me; I do buy them for my daughters. But a Happy Meal, it's outrageously priced, and though I hate it as a customer, I hate it, but as an investor, I love it. They have a nice business model, so it's an interesting opportunity, and it's having decent yields, as you can see. It's having decent yields, and I don't know if you, Lana, you've been doing more the technical side. I am a fundamentals guy, and you seem to be, from the little I know you seem to be into charts and looking at things. And so please go ahead, add your take on this, and if you've got any questions that you think I might be able to answer, I'd be more than happy to do so.
I'm actually already shown the platform, so it is traded on a few stock exchanges and traded by a few market participants. So I should say that it is more or less liquid, so it would be available for the purchase, although the prices could be rather different, I should say. Some estimate it's like 98.
I don't think that I don't know what type of trade that was. It must have been either very little volume or maybe a customer. Yeah, I wouldn't trust that price. I've been trading this. I've been trading this quite actively for my clients over the past few months, and there is no way it was traded on that level. That 98, 99 level, it's not realistic.
I see. Well, the yields are pretty decent. So yeah, well, let's probably discuss another.
They're decent. They're decent depending on what's your expectation, and a lot of I don't know how many people watching this service Latin American clients, but my average client says, hey, I need, for argument's sake, I need $10,000 a month to live because that's my monthly expense. So I'll save $1 million, and with that, at 10% per year, I'll live off interest. And it's like, well, first of all, it's 12% per year, not 10. So that's a major gap to start with. And second, those yields don't exist. They might have existed long ago and far away. Now we are talking of 5 at best, minus one that you need to share with Uncle Sam and pay your taxes on. Plus, if you want to retire for a long time. If you retire at 80, inflation might not be that harmful to your investments. But if you want to retire at 40 or at 50, when you have to compound 20, 30, 40 years of inflation into your savings, if you do not capitalize part of the return, you'll end up losing to inflation, and the 10,000 that are enough today will not be enough in 20 years time, and it will not work. So yes, the yields are interesting, but it's always what the client expects, and it's taken finally after literally a decade of telling clients that after 2008 yields are no longer what they used to be, and that we've been living in a zero interest rate scenario for a little bit over a decade, perhaps not nearly as low as it's been recently, but definitely since the subprime crisis, interest has been very low, and so it's a cultural battle with clients to tell them, hey, if you want to retire and you need 10,000, think of 2 million, maybe 2.5, maybe 3, because 1 is not going to cut it, and it's a tough conversation. It's a tough conversation for somebody that's saved 800,000 and say, hey, I'm 200,000 short of retirement, and having to tell them, hey, no, you are actually 2 million shy of retirement, 10 times more than what you were expecting. It's sometimes a tough conversation, but I agree with you. In the current scenario, a 5% yield on a relatively manageable risk. The rating, it's a double B rating. It's a high yield bond. It is emerging market. It is emerging market, but it is an interesting yield, and the risk return, it's worth it, and it's something that we've suggested our customers, and they seem to be happy with that. And as I mentioned, it has a good coupon, and clients, they understand the low yield. They understand that they're buying above par and that they will take a hit on capital at maturity. They get it, but in the meantime, they're enjoying a nice little check that comes into their account every quarter or every semester.
So you need to raise some bonus in order to make you feel comfortable and calm.
But yeah, well, as I mentioned home biased. 60% of my clients are Argentinian, 60, probably 65 or close to 65, and they've been very active investors in Argentinian bonds for a long time. And Argentina restructured its debt last year, and the new debt profile has extremely low coupon payments, if at all, for the next 2-3 years. And so clients, even if they feel that Argentina is not going to default, and they think that it's a decent debt to hold, and the yields are amazing, because Argentina is trading at almost default levels. So the yields are absolutely amazing. I think out of all of Latin America, only Venezuela is yielding higher than Argentina. So it's amazing. They don't see the coupon coming in every semester. They don't like it. The clients that all my life I've been telling them, hey, stay away from Argentina, diversify away from Argentina. Your house is already there, your farm is there, your business is there. You need to diversify. Let's look at other markets. And they say, oh, no, Argentina. Now the conversation turned around 180 degrees. It's like, oh, no, I don't want Argentina. They don't pay any coupons. What do they think? I'm going to give them my money for free. And it's a tougher conversation, even in a scenario where yields for Argentinian bonds are attractive. If you have faith that Argentina will not redefault yet once again. But that's a completely different discussion, and there are so many great experts that you can contact that know about that way more than I do or ever will. So I'm going to stay away from that, if you may allow me.
Sure. But I should mention also, this is one of the fresh bonds. So this is also another good strategy to buy just new release bonds, because it was released like in September last year. So in any case, even corporates, the professional portfolio managers, which I'm basically dealing every single day, they have the strategy to buy fresh bonds right now in order to get some profits a bit later on. So yeah, good choice. Tell me about another choice, Julix. Yes, did I pronounce
Okay,
it?
Julix, this is the one I told you that was different. That well, I think most people might have overlooked this issuer. Julix is basically the holding company that owns a Colombian bank, Bank GNB Sudameris. It is a very old bank. It's 100. It turned 100 years last year, so it's a century-old bank, very solid. It's owned by the Gilinski family. It is one of the Latin American billionaire families. And the holding, it's a very healthy holding. And the reason why I like this particular bond is if you compare it with the yields of other Colombian banks, you will realize that it's yielding higher returns with the same level of risk, if not better, because I really like the way this bank is being managed. Their credit portfolio, it's sound, it's very robust. They're not having delinquency on their loans. They've been coping with all the crises quite well. As I mentioned, the factor of the coupon, it's a very attractive coupon, and as I mentioned, clients look at yield, but they do look at coupon ever so passionately.
8.5. It's amazing. It's insane.
It is very rare to find such a large coupon, and it's a credit that I'm comfortable with and that I'm comfortable sharing with my clients. As I've mentioned, I've been in the industry for almost 20 years. I've been servicing clients for that long. Now I service their children sometimes, and I've made a million mistakes and advised things that went south, and we had to take losses, or clients had to take losses. I like how I use the first person, but it's their money, so it's clients had to take losses. But at the end of the day, I have to make sure I'm recommending something that I feel comfortable with and that I understand. So clients know banks, they know Colombia. Colombia, it's going.
Another name of Colombian bank. I'm really curious to compare with some.
Well, if you go through, yeah, and I hate to be instructing you on how to use your platform, but if you filter Colombian issuers and within the banking industry, you will get all that information. But Colombia has a very active financial industry with many local banks as well as domestic branches. But of the biggest local banks, the Grupo Aval, Bancolombia, Da Vivienda, those are big local brands that I would compare to GNB Sudameris. Very good comparables. Plus some international issuers have some other international issuers that have local presence will have some bonds. So BBVA from Spain, they'll have they have a large local presence, and they sometimes issue local bonds. But if you check GNB Sudameris, which is this one, even if you compared Julix Holdings and GNB Sudameris, you realize that Julix is yielding a whole lot more than its subsidiary, and it's basically the same risk. It's basically the same risk. Julix is 97% owner of GNB Sudameris. If something happens to GNB Sudameris, yes, I get it. One is, Julix will only be able to pay investors if GNB Sudameris can pay first its debt, and then it can pay dividends to the shareholder. So at the end of the day, I get it why there is a premium, but it is way too large of a difference. I have data from 2-3 days ago when I was preparing for this, and 2-3 days ago, the yield for Julix Holdings was yielding roughly 6%, and Sudameris was yielding 3.6%. So it's a huge difference for intrinsically the same risk, because the underlying asset is exactly the same one. And if you compare it to the other Colombian banks, compared to Bancolombia or Grupo da Vivienda, it's yielding 1.5%. Yes, it is. They're going a little bit more international, and they're growing out of Colombia and into other markets. Many reasons why is that, and why they have a better rating, but the same thing, and Grupo Aval, it's exactly the same. So if you compared Sudameris to other Colombian banks with the same, with very similar businesses and with similar with similar risk profiles on their credit portfolio, Sudameris is yielding a little bit better, and Julix has a premium over that because of being the holding company, and it's basically it's a subordinate. It has more risk than the debt issued by Sudameris. But if you compare the banks, it's amazing the difference.
Yeah, now I'm comparing these two bonds, the Sudameris and Julix. So yeah.
Exactly. You can see there's a premium. There's a premium, and there is no. The Sudameris is a longer maturity bond. Yes, it has less risk associated, but it has exactly the same underlying. So that's what makes it particularly interesting, and why we've been actively recommending it.
I see. Yeah. Interesting to compare, but they have the highest coupon, by the way.
Yes, they do. They have a higher coupon. It's 8.5 versus 6 point something.
Yes, exactly.
But then again,
yeah,
that's a little bit of what clients look at. That's a little bit of what clients look at, and we have to look at yield, not so much at coupon. And particularly another thing that clients don't quite have factored in yet is the taxes. And sometimes the taxes, especially when it comes to interest tax, which is taxed a little bit more heavily than capital gains in most of my markets, you do have a difference there, and sometimes clients need to know that a large coupon, it's nice and it might look very attractive, but at the end of the day, they'll have to share a larger chunk with the tax authorities. So it's another interesting aspect of the large coupon.
True. The investing in bank or financial institutions is rather understandable and stable. We try to go always in the comfort zone. Good. Then let's move to one of the most famous issues all around the world. I should say, probably each private or corporate institutional investor have Petrobras. I really like them, like the performance. You as a rather local guy, probably saw them. So tell me your choice. By the way, I have this bond in my watch list just to track. So tell me more a bit about it.
Okay, so Petro as a company, absolutely everybody knows, and as you mentioned, it's probably the most popular issuer in Latin America. Latin America and oil companies have been, as issuers of debt, have been very actively across the board. Go to Mexico and Pemex is all over the place. Go to Venezuela and it's PDVSA. Go to Argentina and it's YPF. And you definitely, Ecuador, Petroecuador. So every major country has a company that it is partially or totally owned by the government that does oil. And it's a very interesting investment opportunity because it's a very closely associated to government risk, very closely, plus on top the oil and gas industry, particularly when it comes to Petro. Well, the way I see and again, I should have issued this disclaimer long ago and far away when we started. I'm a private banker. We private bankers are not analysts. We take research and we do what's best for our clients. We are not big experts. I don't pretend to be a big expert on anything I'm saying. I'm just saying it is what it has worked for me and my clients and the conversations and has made conversations with my clients interesting and fruitful for them and the way once I understand them, what is the fundamental reason why I am suggesting something, it's easier to have them on board, especially if things don't go as well as we would like them. So when things go well, they don't care why you have advised them. But if at any point in time, the returns are not exactly in line with expectations, if you explain to them at the beginning why it worked out. So think of this as it's not the experts' opinion, it is the golfer's opinion. So it is to discuss over a round of golf as to why. But anyway, so the way I see the oil and gas industry is oil is pretty much fuel, as in petrol. It's pretty much a thing of the past. The world is slowly going to shift away from that. Renewable energies are the future. But that's a little bit far away. And there's a gap in between. And that gap is going to be filled, I believe, by gas, natural gas. Again, speaking about natural gas with a Russian company, it's a little bit of embarrassing because I'm pretty sure you guys know a lot more about it than I ever will. But Petrobras, the one thing I like about Petrobras is they're very large. Brazil, it's a huge domestic market with 200 plus million inhabitants. They are going through a terribly rough patch right now. Pandemic is hitting them particularly hard. I'm not going to enter into details as to the political scenario in which it's being handled and how it's being handled, but they're taking a big hit. But oil prices, even in spite of very low demand, for cars, for planes. Planes are not flying, especially throughout Latin America. Europe has some decent flights. I don't know how many of you know the app Flight Tracker, where you can log in and see every flight that's on the every flight that's on the air. You look at South America, and there's 10, 20 flights at any point in time. You look at Europe, it's hundreds, and US thousands. And down in this area, it's just a few. And if you zoom into them, you realize they're private jets, mostly more than jumbo airliners. So jet oil is not being used. There's little demand for jet oil, little demand for petrol for cars. But with current international prices, as soon as the pandemic it's over and turned around and demand starts to pick up again, Petrobras is going to be very well positioned. Additionally, they're very well positioned for the mid and the long term. They have natural gas resources and gas business. Even if they don't have the resource, the liquefaction, the import, the export, the trading of gas, they're doing well. And additionally, they're working on the renewable field more than many other big oil. They are the wind energy. It's something that Brazil is very active in, and Petrobras particularly solar. So it's a good company. It has a new CEO appointed last month. It's somebody that knows the business, knows the company. It is a political appointment, so it's not like the case of Arcos Dorados, where their management team, it's very sound, very professional, and has been around for decades. Over here, it's a little more for political management team, but still a sound sound management team. And Petrobras has the virtue of being extremely liquid. You can always find a buyer. So if your clients have high liquidity needs, that is something that we take into consideration when looking at this. It has many offerings. It has some offerings in Brazilian reais, and we do have some clients that prefer their home currency for investments. So the reason why we look at Petrobras so closely is because of all the features that it has. It has so many options. You want a high coupon, you've got it. You want a low coupon, you've got it. You want something that's going to mature in 100 years, you've got it. You want something shorter maturity, you've got it. It is like, you know, the Latam treasury. We do not have treasuries in Latam. This is probably as close to it as it gets. And that's why we always have Petrobras, and it's easy. You filter Petrobras as an issuer. You say a client wants a yield between, let's say, 4% and 5%, and you filter that out, and you've got the different options. And you can tell the client, hey, you know, this has a shorter maturity, so it's going to be sensibility towards interest rate movements is going to be different. And so it's an interesting conversation, and it's one that you had on your watch list. We all have on our watch list. We all should have it on our watch list.
Correct. Well, in order to find such pearls, you need to make different focuses. So let's see how basically you can find them. So we at Cbonds offer usually bond search. So what kind of preferences you have right now? In terms of rating levels, as last year we spoke about high yield investments in BB plus environment. Now probably it could be even like B plus or something. So tell me what kind of preferences. Let's do probably the check for Latin America.
Latin America. Then you can, usually I focused on dollar-denominated bonds. I usually focus on dollar-denominated bonds. I on occasion would have some investment in clients willing to invest in Brazilian reais, but in general, they'll probably aim more at the dollar-denominated ones. Sovereign bonds. I'm not very actively trading sovereign bonds right this minute because you either have no yield at all or way too much risk that it's hard for me to advise my clients. So if you look at Latin America right now on the sovereign on the sovereign landscape, you either have to look at Venezuela and Argentina to get yield, or you got to forget it, and you're not getting between recommending a Chilean bond and a U.S. Treasury. To be honest, there's very little yield difference, and at the end of the day, the Department of Treasury can print the dollars, and Chile will need to export copper to get dollars. So
let's do corporates, but let's probably skip transportation because it's not the best timing for them.
No, it's not. Well, funny enough, another bond that I had to show you is a Latime Airlines bond.
Yeah, I thought about them.
It's so the risk about that bond is that it's currently defaulting on its interest payments. For a defaulted bond, they're trading at an amazing level. So let's go to
like 7%, 2026.
Go for the 2024, for instance.
24. Okay.
If you go for the 2024, it's currently trading at 85, 86 levels. Yeah, there you go. It's exactly what it was. Those are. It's not. It's trading without accrued interest, clearly. So it's trading dirty. It hit a very rough patch a while ago. It was a much bolder, but probably a lucrative investment mid of last year when they pretty much said that they were not going to pay up. But as the world goes back into its normal, traveling will, international traveling and air traveling will pick up again. Latime Airlines is very well positioned. They are the only regional airline that goes pretty much into every country, and it has a very broad fleet, and they have the potential of being a great company when we're not in a pandemic, in a global pandemic scenario. But it's an interesting opportunity. It's an interesting opportunity. It is for a higher risk investor. It is for a low liquidity need investor, looking for more for the long run. But if you look at it, it's an interesting bond, because it's clearly that they will reorg this debt somehow, and they'll start paying a coupon eventually. Probably some of the accumulated coupons as well. So you've got, you know, you've got 2 or 3 semesters. You will have 2 or 3 semesters of accumulated interest payments due. That will be cut down significantly, but you're not paying for that interest because you're trading without accrued interest. So you're getting that interest for free, basically, even if it's little and it's not the full coupon. And it's a company that in the long run, it's going to reinvent itself. It's going to manage. As you know, airlines no longer own their planes. So even if they have to downsize, they are able to downsize relatively quickly. So, you know, in the current scenario, yeah, it is a tough industry, but you know, there are some opportunities out there, even in that industry.
True. Well, but in any case, I'm not ready to take this risk. So let's see. Transportation. So, let's see maybe what kind of area we have. Like,
if you put anything, why don't you start with 5%? Because otherwise you're gonna get way too many hits, and Cbonds doesn't like it when you get that many hits. So start with 5 or even 6, and let's aim at maturities up to, let's say, 2035. Let's not go a lot further than 2035. No, it doesn't matter. From it has to be in the future, because otherwise it's either a defaulted bond or one that's no longer outstanding. But if you go to 2035,
35, you said.
35, yeah. Well, let's do 2025 so that we've got fewer hits. Otherwise, it's going to be a very long list. Don't underestimate the power of your tool, Lana. It's
never. It's really a huge one. So not all of them are
ratings. Ratings are tricky in this market.
Exactly.
They're very tricky because it's a very broad range. A double B minus in Europe, it pretty much gives you a very clear idea of what type of bond you're buying. Double B minus over here, it could be so many things that it's tricky. It's tricky to filter out on ratings. It's tricky. I look at ratings, but I hardly ever filter for ratings. I'm sorry, I can't be a bigger sport there. But go for that. Go for single B plus.
Yeah. Well, do you want to exclude something subordinated?
No, but one thing that the industry keeps on telling us that, well, if you want to exclude or no, so one thing that we are looking at every day more, mostly because the industry keeps on, telling us that that's the way it's going, but green bonds. I've used the green bonds filter a few times. Now, don't exclude it, but I don't want to search exclusively for green bonds under this scenario. But green bonds are something that is a filter that I've used quite a few times, and it's an interesting filter, especially in the current scenario where green bonds are becoming very, very popular.
Yeah, they are really trendy. So we can search by the price in case to get maybe some profit, like everything which is traded less than 100. That
you can do that. I have a very good client of mine, has been a client of mine for 15 years, and he only buys bonds that are trading below par. He doesn't care about yields. He doesn't care about coupons. He wants the bond to be trading below par. He refuses to lose capital at maturity. If he refuses to take a hit at maturity, and he will only buy bonds below par. So that is a filter I have used for this particular client.
You see, yeah. And let's so we want high coupons. So what kind of?
Let's say 6, 7. Don't count on there being too many 8% coupon bonds.
I know. Well, what 4 would be okay for?
Yeah, 4 it's too little. Go for 6. Go for 6.
Oh.
That should narrow it enough. That should narrow it enough.
Definitely. So let's check what we can find. So basically, well, we could filter it a lot, actually.
Yes, we do.
7 positions, but in any case, if you make rather fundamental analysis, so you can compare all these features. So which coupons we have, even 9%, 9.75. Rather good parameters. Let's see how they are traded in the end. So the yields are
very attractive. Well, it's sort of like the filters. We place those filters, right? So
visualize them. So yeah, you can see docu formats. Never heard. They have a few. Let's see.
Yeah, very. Most of them were Mexican. Mexico is not a market I follow that closely, so I will not be able to help you out all that much. At least no top of my head. But
well, this one is not liquid, so I don't really like to check those which you just can't buy.
No, it's true, but I think what's interesting is that you can see how powerful the filtering tool is, because from literally tenth of thousands of bonds, we end up with 7. 7 that none of them have the criteria, because it was a very complex.
It's really very precise, I should say.
Yes,
we knew what we are looking for, but let's say if you. Here you have the ability to search for 500,000 of bonds of the universe, so you can filter all these things. So, well, basically, yes, you just need to know what you're looking for, and you'll be able to catch.
Yeah,
but later
absolutely.
On, it's just the matter of better analysis to see which issuer is rather healthy in the current situation, in the current environment. So each of you who still do not have the access to such bond screener, feel free to contact us in order to give it a try and see if you want to diversify your assets in bonds more strongly in order to get some good balance. Then I want to thank you, Ezequiel. Thank you for a very interesting discussion. I should say that it was really fascinating for me to know more about your way of working, how you use our tool to create really interesting opportunities for your clients. Thank you so much, and thank you very much all the participants for joining us. I hope it was an interesting dialogue for you, and I wish all of you to make really weighted investment decisions.